Question 8. What are the potential risks associated with investing in small-cap companies, and how does the VB ETF mitigate these risks? Investing in small-cap companies through the VB ETF carries several inherent risks. However, the structure of the ETF itself can help mitigate some of these risks. Let's delve into both aspects. Risks of small-cap companies. Higher volatility. Small-cap stocks are generally more volatile than large-cap stocks. Their prices can fluctuate significantly due to various factors, including company-specific news, changes in investor sentiment, and overall economic conditions. The VB ETF, by holding a basket of small-cap stocks, inherits this volatility, meaning its price can experience larger swings. Lower liquidity. Small-cap stocks are typically less liquid than large-cap stocks. This means it may be harder to buy or sell shares quickly at a fair price. While VB itself is a liquid ETF due to its high trading volume, it still reflects the underlying holdings of less liquid small-cap companies. Limited track record. Small companies often have shorter operating histories compared to large, established corporations. This makes it harder to assess their future prospects and profitability. VB doesn't eliminate this risk, but it provides exposure to a variety of small companies, reducing the impact of a single company's underperformance. Increased credit risk. Small companies may have weaker creditworthiness compared to larger companies. This means they may be more likely to default on their debt obligations, potentially impacting their financial health and stock prices. VB doesn't guarantee the financial health of its holdings, but diversification across multiple companies helps spread this risk. Growth dependence. Small-cap companies are often categorized as growth stocks, meaning their value is tied to their future earnings potential. If they fail to meet growth expectations, their stock prices can suffer significantly. VB amplifies this risk to some extent as it focuses on growth-oriented small companies. How VB ETF mitigates risks. Diversification. By holding a basket of hundreds of small-cap stocks, VB ETF provides diversification benefits. This means the performance of the ETF is not overly reliant on the success of any single company. If one company performs poorly, its impact on the overall portfolio is lessened. Passive management. VB employs a passive management strategy, meaning it tracks a broad market index. This removes the risk of underperformance that can arise from actively picking individual stocks. Lower costs. Compared to actively managed small-cap funds, VB offers a low expense ratio. This keeps more of your returns in your pocket and can enhance your long-term investment returns. Question 9. How does the VB ETF select and weight its holdings, and what criteria are used for inclusion/exclusion? The VB ETF, Vanguard Small-Cap ETF, doesn't directly select or weight its holdings. Instead, it follows a passive management approach that tracks a specific benchmark index, the CRSP US Small Cap Index. Here's a breakdown of how this selection and weighting process works. Passive management and index tracking. Selection based on index methodology. The holdings and weightings of the VB ETF are dictated by the CRSP US Small Cap Index methodology. This index uses specific criteria to include companies and assign them weights within the index. No active stock picking. The VB ETF managers don't actively research or select individual stocks. They simply aim to replicate the holdings and weightings of the CRSP US Small Cap Index as closely as possible. CRSP US Small Cap Index methodology. The CRSP US Small Cap Index uses market capitalization as the primary criterion for including companies. Here's a general overview of the selection and weighting process. Market capitalization range. The CRSP US Small Cap Index typically includes companies with a market capitalization between $300 million and $2 billion. This ensures the focus remains on small-cap companies. Liquidity requirements. The index may also consider a stock's trading volume and liquidity to ensure the holdings are reasonably easy to buy and sell. Free float adjustment. The index might consider only the publicly available shares, free float, of a company when calculating its weight within the index. Weighting by market cap. Each company within the CRSP US Small Cap Index has a weight based on its market capitalization. The larger the company's market value, the higher its weight in the index. VB ETF replication. Holdings mirror the index. The VB ETF strives to hold all the same stocks as the CRSP US Small Cap Index in approximately the same proportions as their weightings within the index. Rebalancing. The fund periodically rebalances its holdings to ensure they continue to align with the weightings of the underlying index. This process involves buying or selling certain securities within the ETF to maintain the target weightings. Criteria for inclusion/exclusion in VB, indirectly through the index. Since VB tracks the CRSP US Small Cap Index, companies are added or removed based on the index methodology. Here's a simplified view. Inclusion. A company can enter the CRSP US Small Cap Index if its market capitalization grows to meet the index's size requirements, and it meets the liquidity criteria. Exclusion. A company can be removed from the index if its market capitalization falls below the lower limit of the index range or if it no longer meets the liquidity requirements. Question 10. What is the tracking error of the VB ETF compared to its benchmark index? The VB ETF, Vanguard Small-Cap ETF, has a tracking error compared to its benchmark index, the CRSP US Small-Cap Index. Here's a breakdown of what tracking error is and how it applies to VB. Understanding tracking error. Goal of tracking. VB strives to track the performance of the CRSP US Small Cap Index as closely as possible. However, due to various factors, the VB ETF's returns won't perfectly match the index returns. Tracking error defined. Tracking error is a statistical measure of the difference between the returns of an ETF and its benchmark index over time. It's expressed as an annualized standard deviation of these return differences. Causes of tracking error in VB. Expense ratio. The VB ETF has a small expense ratio, but it still has one. This expense ratio covers the fund's operating costs, and it eats slightly into the returns. This small difference in returns contributes to the tracking error. Cash drag. VB might hold some cash to facilitate transactions and meet redemption requests. This cash doesn't generate returns like the stocks in the ETF, and this can cause a slight drag on the overall performance compared to the index. Rebalancing efficiency. Rebalancing the ETF to maintain alignment with the index weightings involves buying and selling securities. These transactions can incur costs and may not be perfectly timed with market movements. This can introduce a minor difference in returns compared to the index. Question 11. How does the VB ETF handle corporate actions such as mergers, acquisitions, and spin-offs within its portfolio? The VB ETF, Vanguard Small-Cap ETF, passively tracks the CRSP US Small-Cap Index, and how it handles corporate actions like mergers, acquisitions, and spin-offs depends on how the underlying index handles them. Here's a breakdown of the process. CRSP US Small Cap Index and corporate actions. Index provider decisions. The CRSP US Small Cap Index is maintained by an index provider, e.g., CRSP. This provider establishes guidelines on how the index treats various corporate actions. Maintaining market capitalization. The primary goal is to ensure the index continues to reflect the performance of the small cap market segment. The index provider aims to maintain the appropriate market capitalization weightings within the index after a corporate action. Corporate actions and VB ETF. Passive response. Since VB tracks the CRSP US Small Cap Index, it passively responds to corporate actions based on the index provider's guidelines. The ETF doesn't make independent decisions about these events. Examples of how VB responds, based on index treatment. Merger/acquisition. If a company in the VB ETF is acquired by another company, the holdings of the acquired company will likely be removed from the VB ETF, and the acquiring company might be added or its existing weighting might be adjusted within the index, depending on its market cap. VB would then adjust its holdings to reflect these changes in the underlying index. Spin-off. If a company within the VB ETF spins off a new company, the index provider might decide to include the newly formed company in the index, potentially with an adjusted weighting based on its market cap. VB would then add holdings of the new company to its portfolio, following the weightings in the updated index. Question 12. How does the VB ETF handle cash flows, particularly in times of high market volatility or redemption pressure? The VB ETF, Vanguard Small-Cap ETF, manages cash flows to maintain its target investment objective and liquidity, even during market volatility or redemption pressure. Here's a breakdown of how it works. Cash flow sources and uses. Creation and redemption. When new shares of VB are created, investors contribute cash, which is used to purchase the underlying securities that mirror the CRSP US Small Cap Index. Conversely, when shareholders redeem their shares, the ETF sells holdings to generate cash to meet those redemptions. Distributions. VB is an accumulation ETF, meaning it doesn't regularly distribute dividends or capital gains earned from its holdings. Instead, these gains are reinvested within the ETF to grow its overall value. Cash management during volatility. Market volatility. During periods of high market volatility, trading volumes can increase. This can lead to more creations and redemptions of VB shares. The ETF deals with this by continuously buying or selling underlying securities to meet these cash flows and maintain its desired weightings. In-kind redemptions. For large redemptions, VB may utilize in-kind redemptions where it delivers a basket of underlying securities to the redeeming party instead of cash. This can help manage cash flow during volatile times. Maintaining liquidity. Cash buffer. VB might hold a small amount of cash to facilitate daily operations and creation/redemption activity. However, the primary focus is on holding the underlying securities as per the target weightings. Creation and redemption units. The creation and redemption of VB shares typically occur in large blocks called creation/redemption units. This allows the ETF to efficiently buy or sell underlying securities in bulk to meet cash flows, minimizing the impact on individual stock prices. Question 13. What are the VB ETF fund's distribution policies, and how frequently are dividends paid out to investors? The VB ETF, Vanguard Small-Cap ETF, is an accumulation ETF, meaning it does not distribute dividends or capital gains to investors on a regular basis. Here's a breakdown of how this accumulation structure works and how it might impact investors. Reinvestment of earnings. Any dividends or capital gains earned from the underlying holdings of VB are automatically reinvested back into the ETF. This means the earnings compound over time, potentially leading to a higher net asset value, NAV, per share in the long term. Comparison to distribution ETFs. Distribution focus. Some ETFs are designed to distribute a portion of their earnings to investors regularly, typically as quarterly dividends. These are known as distribution ETFs. Impact on investors. Capital appreciation potential. the accumulation structure of VB allows for potential capital appreciation through the reinvestment of earnings. This can be beneficial for investors seeking long-term growth, as their investment benefits from compounding returns. Tax implications: since investors don't receive regular dividends from VB, they don't incur capital gains taxes on those distributions. However, capital gains taxes might be applicable when they eventually sell their VB shares. Tax treatment of reinvested capital gains. Capital gains taxes at sale. The capital gains taxes on reinvested earnings within VB are deferred until investors sell their shares. The specific tax rate applied will depend on the investor's individual tax situation and how long they held the ETF shares. Choosing between accumulation and distribution ETFs. Investment goals: the choice between accumulation and distribution ETFs depends on your investment goals. If you prioritize current income, a distribution ETF might be suitable. If you target long-term capital growth and are comfortable with taxes being deferred until selling your shares, VB's accumulation structure can be a good fit. Tax situation: investors in tax-advantaged accounts like IRAs or 401(k)s may not need to consider current income and might prioritize capital appreciation. In such cases, VB's tax-deferred approach can be advantageous. Additional considerations. Expense ratio: VB has a low expense ratio, which means a smaller portion of the ETF's returns are eaten up by fees. This further enhances the potential for long-term growth through compounding. Investment horizon: the accumulation strategy of VB is generally considered more suitable for investors with a long-term investment horizon, as it allows for the benefit of compounding to take effect. Alright everyone, to wrap things up, the VB ETF offers a compelling way to invest in the exciting world of small-cap stocks. It provides diversification, tracks a reputable index, and keeps costs low with a competitive expense ratio. We explored the potential benefits of VB's accumulation structure for long-term growth, but remember, there are also risks involved with small-cap investing, like higher volatility and lower liquidity. So, whether the VB ETF is a good fit for you depends on your investment goals, risk tolerance, and time horizon. Do your research and consider consulting a financial advisor before making any investment decisions. Thanks for joining us on this deep dive into the VB ETF. If you enjoyed this video, don't forget to like and subscribe for more in-depth ETF breakdowns. We'll see you on the next one.